Hey everybody, this is Jim at SP500chart.com. It's a little after 4 on August 26, 2014. We're looking at a new record high close over 2,000 today. But the question is, how excited should we really be about that? We'll talk about it in a second. In order to help me save my still stricken voice, please read this, pause the video, and give this a read right here, and then we'll proceed. Okay, I'm assuming you read it, so we're diving in. Well, starting here with a 15-minute chart, you can see that since getting out of this descending wedge, by the way, that was a pretty little wedge pattern. Since getting out and over this resistance line, we've done nothing but go up. This pattern implied that we should come up and at least test this level right here. But we've done better than that. We have actually come up and surpassed that mark by roughly 40%. Now, what's interesting is we're in a period of what appears to be, maybe for lack of better words, a low volume melt up. We're just sliding upwards in a rather lazy fashion. And I think at some point, this market's got to give back some of that substantial move and consolidate in a little dip at some point. I kept thinking, well, maybe we were going to do it after yesterday, but today, no, it didn't happen. Tomorrow, I don't know. I think we can keep these two channel lines here, okay, for reference. And I think if we do break down, I think we would probably at this point be looking for support somewhere around these trend lines here. And I'm talking about if we break our channel. I think we would probably pick up some support fairly quickly, because we've got that old neckline, which I'll remind you is from our triple top thingy right here. We're back over that. By the way, we also have this resistance line right here that we're toying with getting over. My feeling is there is still a good chance that we are setting up another inverted head and shoulders pattern. And if that is the case, the target, because this is now an upsloping neckline, we would be looking at a target just shy of 2,100 in the S&P. Now that's going to be interesting to see if we get that pattern and if we do get that target, because we've got some fairly long-term resistance lines that we would have to get over in order to do that. So this is definitely getting interesting. For right now, just enjoy this melt up, but be prepared. I think at some point we're going to wake up probably to some, I feel we're going to wake up to maybe a gap down at some point, and we're going to come down and test some support in a fairly meaningful way. And I'm not going to freak out if that happens, because that would be a healthy thing. It would be a good thing for the S&P to do that at some point. If we move in and look at this on a 5-minute chart, I mean, what can you say? Just getting up, melting up, a little give back, nothing much. Melting up, a little sideways, a little gap up, a little up, just this very lazy, meandering path upwards. Sort of to me looks like it's begging for someone to come in and start some selling and knock this thing down 1% or 1% and a fraction, so that we can consolidate and then hopefully take out this this resistance line right here, not right away, but at some point in the future. I really would like to see some selling over the next week even. Hey, don't know if I get it, but you know what I'm saying. That would be, I believe, a healthy thing for the markets. Otherwise, if we blow on up out of this line and then come up and get into about the 2020, 2022, 20 to 25, something like that, right around this area, I don't think that would be particularly healthy. I think that would likely set up some more significant selling that could jeopardize the getting up to that 2100 level. I would rather us back up, take it out, then get about business. So guys, that's about it. Really, there's nothing much to add. This is the same video essentially as yesterday. So, you know, what can I say? Well, I tell you what I can say. Thanks for watching. Thanks for your support. Take care.